Hey everyone, welcome to another episode. My name's Dom Warnaar. Today I wanted to talk about something a little bit controversial. I wanted to push against the grain today and tell you that your parents were probably wrong about credit cards this whole time. You see, when used correctly, credit cards can be a great asset in building wealth. And I'm not talking about those cards that give you frequent flyer points and fly you around the world. Using a credit card for everyday purchases is one of the easiest ways to increase your credit score. Banks have always been pretty transparent in saying that having no debt at all doesn't make you creditworthy. In fact, having a credit card and displaying prompt on-time payments is evidence to a bank that you are a good manager of debt. In doing this, it's really important that you only purchase things that you can repay within those 30 days. While it's okay sometimes to take advantage of those interest-free periods, showing a lender that you can pay off your credit card every month is a very encouraging sign. If you have an old credit card, you also shouldn't get rid of that card just for the sake of it, especially if you plan on needing it again soon. Reapplying for multiple credit cards impacts your credit unfavorably. This is the same if you apply for multiple credit cards at once. This does, however, come down to your income, but every credit card you have needs to be accounted towards potential loans in the future. Having an everyday low-rate credit card with a limit you can easily pay off every month is probably the best strategy. Having multiple credit cards increases your liabilities in the eyes of lenders. For example, if you have $10,000 in credits across multiple different credit cards, when applying for a loan like a home loan or a car loan, your broker will have to take this into account as a liability and as if you were paying a $10,000 loan, even if the balance on all of those is zero. The other major mistake I see people making with credit cards all the time is paying the minimum repayment. I even point this out to people and I've had them say, well, at least I'm keeping up with the repayments, right? Listen to me now, this is not financial advice, but if you plan on paying the minimum repayment for the rest of your life, you might as well claim bankruptcy if you can, and let me explain why. When you pay the minimum repayment, this is what you're actually doing. Let's say you have a credit card with $1,000 credit and you purchase a new computer for $800. Let's say you have a low rate credit card with only 12% interest per annum, not too bad, right? Now, the minimum repayment on a card like this, I'm just guessing, might be around $25. If you pay the minimum, it will take over 3 years to pay that amount off, and you will pay close to $200 in interest. And you'll be paying interest on top of your interest. Let me explain. When you pay the minimum on your credit card, what you are actually doing is compounding interest. See, when you invest in stocks and it grows each year, we call this compounded interest, where you increase the interest above the principal invested. Well, in this case, our principal is the amount that we borrowed, and the interest we are being charged is growing and compounding. When you pay compound interest, you are paying interest on top of your principal and interest. Now, if you can put the extra money onto that, your repayments, you can reverse this very quickly. Effectively, the interest will be reversed as compound interest income rather than compound interest debt. This is called reverse compound interest. If you think credit card debt can't get out of control from just borrowing $800, just jump on Google now and check out any compound interest calculator and have a look at how much your principal can compound into an insane amount that would drive any sane person insane. Guys, I hope you enjoyed today's video. Don't forget to subscribe and hit that bell button so you know when the next video is coming. I appreciate you watching. Catch you next time.